5, 4, 3, 2, 1.
Welcome to this week's edition of the EUVC Lowdown, the show that wraps up the week in European venture with some of the key people making the headlines. Today, we're joined by Rich Ashton from First Party Capital, Robert Hegedus from Fiedler Capital, Dan Bauer from Superseed, and David and Andreas, of course, the infamous pair from EUVC. And I'm Kathy White, and I'll be your host for today's talk. Rich and Robert, it's your first time on the show today, so because it's the first time, we're going to need you both to do a little intro, a little one-liner, just to introduce yourselves and the funds. Rich, are you happy to kick us off?
Yeah, sure thing. Hi guys, I'm Rich Ashton, one of the founders and managing partner of First Party Capital. We're a pre-seed and seed stage venture fund investing in ad tech, martech and digital media startups globally. We are a first-time fund manager, currently raising a 10 million fund. We've raised 7 million so far and are currently leading 2 oversubscribed seed deals in Europe, which is a very exciting milestone for us.
Awesome, thank you. And Robert, same question. Tell us a little bit about Fiedler Capital and you.
Yes, so I'm Robert Hegedus, partner at Fiedler Capital. We are also a pre-seed focused fund that focuses on geographic area, namely CEE. We are also emerging fund managers. We had a micro fund a few years ago that we invested in a handful of companies, and 2 of those emerged to be leading startups in CEE, namely Bitrise and Xeon. And now we are also launching our first sort of institutional fund with a target size of 25 to 30 million.
If I can just kick something in on this, because Robert cracked me up when we were partying together in Prague, and I think you made the best humble statement towards the end, which was about this was in on the topic of how well is your fund going to perform, and then I think you said something like, well, I spotted but missed or something like that the first three unicorns of the region, so probably I can hit another one for the coming 10 years. How was that story? Tell us it just real quick, because I think it was hilarious.
There were a couple of hilarious stories on the table, Andreas, and I'm trying to recall.
No, it's just
this one.
You've been in 2 very large successes,
Yes.
and then there was a third one which you were also very close to. Just tell us just a bit the background there.
So should I? Okay, I guess this is like one of the Baltic companies that are one of the leading startups by now. Also, I think emerging unicorn, close to unicorn status, and we had an opportunity early on to invest in them. I think the valuation was around 2.5 million post money, and they invited me to their offices in Riga, together with another angel investor who was supposed to co-invest in the round, and we spent the whole day together. And then, the guys in the company looked really solid, but then to some extent there was some weird vibe, because the angel investor that they invested somehow very strange. So first of all, he was an American guy based in Russia with an email address of david12345@gmail.com. He was supposed to be this Microsoft executive, but you couldn't find anything on LinkedIn. And so there were a few sort of weird signs. And then he pinged me before the day to start the day together at the breakfast at the hotel. So we had a breakfast, and then we went to spend the day with the company. And then I fly back to my hometown. And then the next day, there's like a Latvian number calling me. I pick up and they say like, hey, yeah, we are calling from the hotel. You're so and so, and you stayed here. I said yes. What would you like to? And then they say like, yeah. So you had yesterday like breakfast with this gentleman in the morning. I said yes. And then who was that gentleman? I said, well, why do you need to know? And then they said, yeah. So apparently, I know after we finished breakfast and I left to the office of the company, he stayed for a bit, and then apparently he went to the sauna and stole a laptop. So. I'm not sure if this is the story that you're thinking of, but then that made me like sort of so shocked that we actually ended up passing on a company, and it turned out to be like 100x, 200x miss. To be honest, these are the sort of things that can happen to you in Central Eastern Europe.
Yeah, I just thought it was a great story about what's happening behind the curtains of these massively successful companies that we hear about in the press. So I just wanted us to bring that story up, and you had a bunch of them, and I just you're hilarious, Robert. So I just wanted to bring that up. Sorry, Kathy, for bombing everything.
No, it's fine. I love it. It's like Keep costs low, steal laptops.
Yeah, exactly. The hustle mindset.
Awesome. All right. Well, the first topic we've got for the day, Rich, you're going to tell us a little bit more about your upcoming conference, Mad Tech Money. Do you want to just start by introducing the conference?
Yeah, sure thing. Thanks a lot. So yeah, we're running an investment conference in London on 15th of November. And basically it's all about bringing together ad tech and martech founders and the investment community. So, there's going to be 4 or 5 panel discussions and then a networking event in the evening. We've got some great speakers from, unicorn exited founders to corp dev teams that are very actively buying in the space, private equity firms that are also actively investing and buying companies. And so, yeah, really, it's all about kind of how do you fund, scale, and exit your startup, and yeah, all about connecting kind of people who are kind of running those companies with their potential investors and potential acquirers. And yeah, it really speaks to our, I guess, own philosophy at First Party Capital. We're a very community-driven VC. We've got about 150 individuals that have invested in the fund, and another few hundred that are part of our angel syndicate. So events like this are really all about bringing our community together, and yeah, kind of bringing the conversation to the financial and the investment side rather than the more general industry trends that tend to get spoken about at the trade events.
Amazing. So I'm totally out of the loop when it comes to what's going on in ad tech and martech at the moment. So I'd be interested to get your thoughts on, what are the exciting areas right now when it comes to startups working in that space. But I know, Andres, you had something to say, so I'll kick it to you for a sec.
That was actually my exact question also, martech has been really has fallen out of grace for quite some time in VC. So I'd love to hear you just respond to that, Rich.
Yeah, sure. And I don't want to take the next 27 minutes to answer the question, so I'll try and keep it relatively brief. I could go on for a while. So yeah, look, as you know, and I think it's part of the reason why we exist and why we've been quite successful and why founders really want to work with us is that, ad tech and related verticals have not been, the darling of VC since probably 7-8 years ago. And so we saw a huge opportunity to, provide capital and expertise in our network to this underserved segment of founders globally. I think a lot of VCs still have a, conception that, Google and Facebook have won the game, and that, what's the point kind of thing. So, that obviously they're huge players and there's 1 or 2 other big platforms, but there's so much change happening, largely driven by the massive privacy changes, either at a governmental level, things like GDPR, or obviously the changes that Apple and Google are making in terms of how can marketers, target users and measure the effectiveness of advertising campaigns. So yeah, there's some massive changes that are driven by privacy, which are, basically means that things like cookies and other, mobile identifiers are basically all going away. And, it's a really exciting time for startups that are now innovating and building the tech stack of the future so that marketers can continue to reach their audience in a privacy compliant way. And also so that publishers and media owners can actually continue to monetize their content and still get the benefit of, selling sort of data enriched audiences rather than just a very general, sponsorship style advertising, which is going to be much lower kind of value. So that's the kind of overarching theme. And then there's a few pockets, I suppose, within that are, particularly hot at the moment. So connected TV or CTV, as we would call it. So the ability to start to actually, take web and in-app style advertising to people's homes in terms of smart TVs, and bring that type of data-driven approach to actually TV advertising. That's a huge one. Obviously, it's a massive global market, and there's a lot of innovation happening there. And the likes of Google and Facebook aren't playing in that space. And then there's also a huge kind of subcategory called retail media. So very briefly, if you think of what Amazon did, going from a logistics business to becoming a wildly profitable business on the back of their advertising business, essentially. And then the likes of Walmart now have, a multi-billion-dollar ad business. And you're now seeing all of these retailers like Tesco, Carrefour, even some of the, the airlines now are becoming sort of utility publishers, and they can basically kind of show ads on site, give marketers perfect attribution loops, and, take what might be a very low margin logistics business to become a very profitable kind of ad network style business. And again, there's not the kind of same infrastructure in place yet that there is on the rest of the web. So there's a lot of interesting startups that are innovating around that, helping marketers to run their campaigns across those properties, but also helping the actual retailers or publishers to, build out their tech stack and be able to actually serve those ads and link it back to, the shopping cart, etc. I'll leave it there for now, but yeah, those are kind of some of the key things that we're excited about.
No, that's great. Thank you. Dan, you raised your hand.
Yeah, so I'm always intrigued because obviously VC runs in hype cycles. So I'm always intrigued by martech, ad tech, because it's been out of vogue for a bit, or has it? And this is what I'm going to ask Rich. So it feels like it's been out of vogue, but it feels like it's coming back into vogue. And I wanted to ask, how does the hype cycle reflect against macro? Because obviously you read the headlines today, 800 billion wiped off big tech, and all ad platforms taking a shit because people are like retrenching and panicking. So my question to you, Rich, is how are you seeing the future, as in the hype cycle looping and connecting with this macro piece, and what kind of signals are you seeing?
Yeah, I mean, it was obviously interesting to see Meta take a huge plunge yesterday. My business partner is in the process of writing our weekly newsletter, and the title is Jim Cramer's Meta Tears Are a Buying Signal for Ad Tech. I don't know if you saw that CNBC episode yesterday, but yeah, him kind of talking about the plunge of Meta. So yeah, I think, with all of the privacy things that are going on, obviously Apple's, ATT, etc., has had a huge impact on Facebook. Again, I think that does play into the kind of earlier stage ecosystem that are innovating around it. In terms of the macro stuff, I mean, yeah, as with all industries, last year was, a huge year for a lot of companies, and there were a lot of exits, both trade sales, IPOs, and private equity buyouts. And, as with any time that happens in an ecosystem, be it a sector or a geography, that then, creates loads of very wealthy people that then go and start their own thing or, put money back in as angel investors. So I think hopefully we're at a quite exciting point for our own microeconomic cycle, if you like, within the sector, that we do now have all this kind of liquidity that was created last year for people to go and either fund or start new ventures. In terms of the macro, it's an interesting one. Yeah, will obviously be reports and some companies that will, decrease their ad spend as and when we head into a recession. But having spoken with some pretty senior leaders at companies like HSBC and GlaxoSmithKline, they're actually continuing to, deploy their kind of media investments at the same pace. And HSBC, who sit on a lot of obviously personal financial data, say that actually based on what they see, they're not expecting a particularly deep or long recession. So those are obviously some anecdotal things, but yeah, there may be a slowdown for some companies. I think the larger platforms may have bigger impacts on their share price, obviously, as the basket of kind of public companies comes down generally. But hopefully for startups, where obviously they're kind of somewhat isolated from the public markets, they're not going to see that same impact.
Robert, you had something you wanted to add a moment ago.
Yeah, I mean, first of all, Rich, I really like sort of your positioning, because I can confirm from first-hand experience that generally VCs really hate edtech and martech startups. So I got stuck in a situation some time ago where I was helping out sort of a scale-up CEO, and we were very confident the business was doing great, that they're going to raise an amazing round, and it was a really tough experience for him. But at the same time, I think the fact that no one is focusing there and you are sort of positioning yourself there, I think it gives you, potentially a really good edge on the deal flow side. So I really like that, and I also think that through this whole Apple privacy changes and so on and so forth, the number of startups that are now suffering sort of in the early stage, scaling the business through online marketing, there will be a lot of companies who are looking for new solutions, and I think that gives new startups some amazing opportunities, I think. So yeah, I quite like that. I think you're going to see amazing deal flow if you manage to put yourself out there in this niche. That's for sure. Yeah.
Thank you. Yeah, I mean, we're already seeing that. There's quite a few examples of either kind of second or third time founders or people that have been in the industry 20 years, who are coming to us even pre-company formation. And in some cases, we're not officially an incubator or anything like that, but we're essentially having conversations with people pre-company formation, and they're saying, as soon as we get this up and running, I want you guys to be my kind of first money in. And so as a result, we're getting in super early to companies that generalist VCs just aren't going to see until probably Series A or beyond. But yes, you're right. So one of my co-founders at First Party is also an ad tech entrepreneur. And he actually received an inbound email from an investor or an investment firm, so saying why companies should work with them. But literally in the email they sent to him, as an ad tech founder, we don't do ad tech. So yeah, there's definitely still a bit of a feeling amongst generalists that it's either a complex space or that it's perhaps too competitive. But obviously, being industry specialists and being in the weeds and very much kind of living and breathing the industry, we know what to look out for, obviously.
That's great. Thanks, Rich. Just because we need to move on to the next topic, do you just want to let our listeners know how they can find out more about the conference or how they can get involved?
Yeah, sure thing. So the website is madtechmoney.com. It's in London on the 15th of November. Please get in touch if you'd like more information. And tickets are available on the website. And Andreas, I think, is also going to be putting a link to it in the newsletter.
Awesome. Thanks very much. All right. So moving on to our next topic, and this is the big one for today, and it's on the focus on unicorns. Is this the wrong approach or the right approach? The question here comes from a Forbes article, which kind of brought this to the forefront of our minds this week. So Andy Gaskell wrote a piece where he argued that rather than focus on mythical unicorns, policymakers might be better off focusing on the much larger pool of small and medium enterprises that make up the bulk of the economy. And this got us thinking that there are two questions that we kind of want to put up for debate. So one is from a policy perspective and another is from a VC investment strategy perspective. Policy question is this guy right? Should policymakers focus less on breeding unicorns and more on the Mittelstand? Well, let's start there. Dan, any thoughts on policy?
to start with, it's what the industry knows. It's what gets headlines. It's what creates PR. We're bloody talking about it. So is it the right focus? Is a double-pronged answer, really. If he started speaking about an unknown term, I couldn't think of what a half unicorn would be, a schmoonicorn or something, a soonicorn, I think they call them. So you wouldn't get the press and the PR. So as a vision, as a focal length, as the press, as the sexy story, I think it's right. As the underlying, as in for policy, otherwise we wouldn't be talking about it today. The actual underlying commercial reality of focusing on unicorns is not right, I don't think, for a variety of reasons, but that's problematic. And I think the primary reason that I struggle with it is that a lot of unicorns don't make money. I know that we've had 12, 14 years of bull run, and there was a lot of bullshit and froth in there, but a lot of the unicorn bigwigs that we see, some of them can never be profitable. So that I think that the underlying commercial reality is a big problem for me. I think the other industry challenge that we have as VCs is that we rely on power law and probabilistic thinking. So we have to, again, going back to the policy vision, we have to have this unicorn vision piece to be able to use that story to focus on how we invest and what we draw up through the ranks and what we focus on, because we want globally viable unicorns. That's just the reality of the VC industry. The other challenge I have around it in Europe is that obviously most unicorns are on the NASDAQ because Europe doesn't have a viable stock exchange. So whether it's a bullshit model or not a bullshit model, what happens is we get this massive brain drain from Europe going to the States to list. I know it's the land of sunshine and honey, but we need some policy shift around how to create some kind of attractive European-centric listing engine and some kind of stock basis for publics. So anyway, I'm waffling, but I think policy, yes. I get the PR, I get the press, the commercial reality. I struggle with it massively. But until the VC model shifts from probabilistic and power law, until we have a European-centric around and regulation, maybe forcing some of these challenges and issues. So the underlying story I have challenge with.
I think this couldn't be a more timely topic from my perspective. So we're all getting ready, or not all of us, but many of us are getting ready for Web Summit. Actually, the Lisbon Council will announce the Unicorn Factory, I think, or something like that. They're devising it, and I think the big announcement is coming by our mayor of the city of Lisbon, who was the previous head of innovation at the European Commission, so a guy that has been around. And I think when we talk about policy, fair game, do whatever to get the headlines, do whatever to get the attention, right? But I do think that there is a very good point to what the Forbes article is saying, in the sense that if we look at Lisbon or Portugal as an ecosystem that I can talk about in great extent, right? We have all of our great tech success stories basically not headquartered here, getting out of here as soon as they can, because the tax burden in Portugal, guys, is ridiculous. And wages are shit. Makes no sense when you look at it, right? So I think there's a lot to be told of, okay, from a policy perspective, shouldn't the focus be on just making sure that the core underlying building blocks for competitiveness are there, rather than talking about unicorns and soonicorns and dragons and gazelles and a fucking bestiary of things no one really knows what that is, right? And obviously we need to educate people as well, but that's different from a policy perspective. I think we're still missing some core building blocks to talk about unicorns across Europe, using Portugal as just a very concrete example that I know.
Yeah, I'm just going to jump in really quickly, and then we'll move to Robert. But it's interesting hearing more about what's going on in Portugal. Like, living in Spain now, you see the same problems, right? Like, I think in terms of unicorns, you have Glovo, Factorial very recently became a unicorn, but there's so much, there are so many things in the way of Spain to create more. And I think it's kind of the same feeling I'm getting when I talk to people in Portugal, even at a very basic level for SMEs. I was chatting to the guy that let me into my Airbnb yesterday, and he was talking me through how long it just takes to move a business, even like a very local business, forward in Portugal. It's slow. There's no speed. Unlike in kind of Anglo-Saxon countries in Europe where things do move faster, we're a bit more set up to build unicorns. So yeah, there's just an observation, having arrived in Portugal yesterday, but coming in from Spain, where even the startup laws that they're meant to be passing are taking forever to come through. Robert, you wanted to share something on this. I'll pass to you.
Yeah, so just actually building on what you and David have said, I don't know the article, unfortunately, so I'm just going to try to sort of say something to the topic. But generally, when I read policy and unicorns and startups in the same sentence, I start getting skeptical. generally. I think, in my experience, what I have seen, sort of any rules, laws, and so on and so forth that were trying to, regulate the industry or help startups. So far, what I've seen, sort of on the local level, also on the European level, I think they had marginal impact. We had actually one of the big problems that the whole of Central Europe, Central Eastern Europe is struggling with, is the fact that for years we've been flushed with public capital that in many cases was allocated terribly inefficiently on a local level, and basically what you see is that the real success stories are coming out of different pockets, sort of, or different areas of the market. So to some extent, you have like sort of these two parallel worlds being built up. On the one hand, you have the state funded sort of venture economy, and on the other hand, you have a private funded venture economy, and that's actually much smaller than the first one, but still I think generates the bulk share of the successes. So that's one. And I also fully agree that actually I think the focus of policy, it should not be about like unicorns or sunicorns or whatever, but really just like create the sort of the infrastructure, as also David alluded to how can we easily fund startups. And it starts from like basically setting up companies quickly. The option, I mean, ESOP is a huge issue in Europe. Like the ESOP regulation is terrible, and it's like everywhere different. And also just I'm setting up a fund now, and setting up a fund in Europe, I mean, this is a nightmare, to be quite honest. I mean, but it's probably worth a whole show on itself. But yeah, so I think those should be the focus of policy, and not talk about whether it's unicorn or sunicorn or whatever. Yeah.
It's actually funny because I have another perspective, which is I actually think that it might be incredibly important that policymakers and our politicians really do pick up the unicorns and do everything they can to pick up that part and the importance of the jobs created and so on. Just from the perspective that I think in Europe we have such a strong, we're quite socialistic across all countries, right? And if we want the masses to be behind the backing legislation that allows the venture capitalists, the rich ass investors, to be faster in setting up their funds, like so I can more quickly deploy 50 million euros to the average person, to be prioritizing that on a policy level over getting food to the old people in the homes, that is a pretty damn difficult task if we don't have a great story to tie it up to. So for that reason, I do think that there is, also if you want to focus on allowing, for legislation that will make it more efficient to go on the Portuguese stock exchange instead of the Nasdaq, right? Then that can only happen if we tell a narrative to the average individual that will actually get them to understand why it's worthwhile giving, in quotation marks, the rich people a better position in the economy. But Rich, you had some perspectives. I'll kick it to you. I just had to put in my rant there.
Sure thing, thanks. Yeah, I think the only thing I'd like to add from a policy perspective is frustrations around maybe the government sort of institution funding for firms like us. EIF, obviously, you have to have 2/3 of your portfolio in the EU. Now that the UK is no longer part of the EU, that can be challenging. And institutions like the British Business Bank, you have to have 100% of your portfolio, I believe, in the UK. And so we're investing globally, and it's frustrating that either of those two institutions wouldn't say, here's 5 million, 1 million, 10 million, whatever it is, and you have to invest all of that in this local area rather than the whole fund or 2/3 of the fund. So yeah, for us it's challenging investing globally, not able to sort of tap into those type of public body LPs. And then just quickly on the business model, maybe we're against the grain here, not only investing in ad tech but also maybe not necessarily being unicorn hunters. Our model really relies or is kind of based upon the fact that we see a sweet spot of exits in our sector, generally trade sale or private equity buyouts, between 50 million and 250 million. And we think that we can still make very, very good returns on that. But let's be honest, a kind of Silicon Valley VC is not going to get excited about a 100 million trade sale. But I think, Robert, to your point earlier, if you'd been able to get into that company a 2 million valuation, you could have still 100x'd with a kind of 200 million outcome. Obviously, give or take some dilution and follow on. But, US VCs generally have a much higher entry point, so unicorn has become this big thing. But I think for us personally, we're not kind of obsessed by the unicorn mantra.
That was exactly the conversation that I wanted to take this to now, because in Europe we do have VCs that don't necessarily chase unicorns, and I wanted to hear your perspectives on that, and also reflect it to your own investment thesis and strategy. Let's just hit it real quick. But Robert, you kick us off, but I'd love to hear the perspective of both you and Dan on this.
Yeah. So generally, I think historically there has been quite some arbitrage between the different regions in terms of pricing, and so I mean. Already from Europe to the US, and then if you take, for example, some emerging regions like the CEE, then definitely from there. And so in that world, chasing unicorns, I think to generate great returns on a fund level was not absolutely necessary. I think that is changing to some extent, and valuations are really picking up as sort of like, a lot of VCs have started doing remote deals and so on and so forth. And so we are, like in our example, like we are now really in the process of like, modeling out sort of a new fund and how we should be constructing the portfolio. And I do think that, in order to generate like really outstanding returns for our LPs, we will need to hit like sort of, one or two outsized successes. Otherwise it will be tough, So I think that may become also sooner or later the reality sort of in our region, but time will tell.
Yeah, just to answer Andreas's question, like I love bringing up like life sciences or biotech as an example in this conversation, right? Returns in healthcare, life sciences, biotech, drug dev, etc. They tend actually to be better than in IT, software, tech, generally speaking, right? And the data that I'm referring to is US data, because that's the data that I have, and it's referring to probably 10 years ago. So pre-COVID, that's important to put into context. And I would challenge probably anyone in this call to name a life science unicorn, right? That's just not the model in life science. It's just not the model. You don't drive returns doing that. You take them through the regulatory pathway and then trade sale. So I think that in many areas, hunting unicorns is definitely not the way to go. In others, it might be. I'm very much of the opinion that I'd rather if I were to build a VC fund, I'd rather focus on trade sale as exit route than anything else. But that's kind of my own kind of personal, not very experienced opinion out there. But I think it's dangerous when we connect VC to unicorns, because it's definitely not the standard model per se. It might be in some spaces. It might be what we've seen in the headlines from the US, and I don't necessarily agree that the US is doing everything right. They're doing a lot of things right, but maybe not everything. Anyway, just a small David rant.
Yeah, if I could just follow on with that very quickly in terms of kind of as a VC being able to influence the outcome. I think if you're hunting unicorns and therefore it's IPO, it's relatively little influence you can really have on that end outcome, right? Whereas for trade sales, especially if you're very sector focused, be it ad tech, be it life sciences, we already know a lot of the corp dev teams that are going to acquire our companies. We can call them up and say, hey guys, you should be working with them. Have you looked at it? So we can really be helpful and influence those outcomes rather than kind of throwing things at the wall and hoping that someone eventually gets to a unicorn IPO.
So we just sold, it was a bit of a distress sale. One of our companies just exited at 50 mil. We invested at about 10. So 50 mil is like nothing. You'd never see it in the press. You'd never talk about it. But there was challenges with the founding team and stuff I won't go into, but managed to get a sale. Now that's 5x, right? So if you get a 5x fund, that's amazing. But it was just like such a non-entity. It was such a non-thing. So I just wanted to add some context to it. But I think there is, as I've said this before, there's the vision piece, there's the PR, there's the sexy kind of focal length, and then there's the reality. I don't think that many VC funds are actually that stressed and worried about unicorns. I think there is a reality that lives underneath the headlines. So I just wanted to kind of, I'm guessing for a multitude of people, but I think that's more the reality. Healthy trade sales all the way. I'd be super happy if half my portfolio was selling for 1, 2, 3, 400 mil. I'd be super happy.
If that happens, can we have a party?
Yeah, let's do it.
Yeah.
I mean,
Can it be in that dark room where you always do the calls?
we got 60% graduation. We had 2 exits, 60% graduation. So long may that trend continue. But obviously, walking into a bear market of hell, who knows what's going to be on the other side of this?
We'll see. On that note, we've got to wrap up for today. So thank you all very much for joining us. So make sure, if you're listening, to tune in next week, and also check out our newsletter. You can head to eu.vc, as well as see everything that the guys are posting on LinkedIn, where we'll continue the conversation and also post the latest funds that have raised, as well as the who's hiring right now. And as always promised, there will be a hell of a lot of GIFs, memes, and emojis, and we'll do our best to entertain you, and we'll see you next week.